Every time something big happens in finance, it starts the same way, quietly. The public hears the story after the moves have already been made. By the time headlines appear, Wall Street is already positioned, already invested, and already ready to profit. And right now, the same thing is happening again with XRP. You're not supposed to notice it yet. You're supposed to believe XRP is just another altcoin, a relic from the last bull run. But behind closed doors, deep inside the same institutions that once mocked crypto, something has changed. They're not laughing anymore. They're building, they're buying, and they're preparing. Welcome back to Crypto Equation, where we expose what others ignore, the moves, the data, and the truth behind the noise. Here's the uncomfortable truth. Wall Street doesn't hate crypto. It hates competition. And for years, XRP represented exactly that, a digital asset built to bypass the old system. While the public was distracted by lawsuits and price dips, institutions were studying it. And now that the regulatory fog is lifting, they're starting to act. They're quietly accumulating positions, investing in infrastructure, and preparing for the exact system they once dismissed. Because they understand something most retail investors don't. XRP isn't about speculation. It's about control of liquidity. Think about it. In traditional finance, control over money flow equals power. That's what Wall Street has always guarded, not innovation, but influence. But XRP threatens that dynamic because it's programmable liquidity that doesn't need intermediaries. It moves value globally in seconds, for fractions of a cent, without Wall Street's permission. That's not just disruptive, it's existential. And that's exactly why the big players are moving quietly. They don't want to fight it, they want to own it. Let's talk about what's actually happening. While retail traders argue on social media, major institutions are quietly positioning. Reports show that several Wall Street firms, including those involved in blockchain pilot programs, have begun exploring RippleNet integrations and tokenization projects. Even major custodians like BNY Mellon and State Street are investing heavily in tokenized liquidity platforms. What do all those systems need to function? A bridge asset, a settlement layer, a compliant, scalable network that can connect currencies and blockchains globally. That's XRP's entire design. So when Ripple executives mention working with financial institutions and regulators, that's not fluff. It's the bridge being built, piece by piece, for Wall Street to cross. Here's where it gets even more revealing. Wall Street's blockchain pilots, including programs run by JP Morgan's Onyx, Citi's DLT initiative, and BlackRock's tokenization research, all share the same long-term goal, creating a network for instant compliant settlement of digital assets. That's exactly the problem Ripple solved years ago. They were early, too early. Now the world is catching up to what Ripple built before it was popular. So ask yourself, if you're Wall Street and a company already holds the tech and patents you need, what do? You partner with them. You accumulate their asset quietly before the public realizes what it's worth. That's how this game works. Most people don't realize how familiar this pattern is. Before the 2008 crisis, insiders accumulated mortgage-backed assets before retail investors even knew what they were. Before the AI boom, hedge funds poured into semiconductor stocks while the public still debated ChatGPT. And now, before the tokenization revolution hits full scale, Wall Street is quietly preparing for the asset that moves that value, XRP. It's the same script, different decade. Ripple's leadership knows it too. Brad Garlinghouse recently said, "Institutions are watching closely. The ones who move early will define the next generation of finance." That's not a prediction, that's a warning. Because by the time XRP becomes mainstream, most of the float could already be in institutional hands. Wall Street doesn't chase headlines. It creates them after it's done buying. You're watching the quiet phase of accumulation play out in real time. Exchange data shows that while retail selling pressure has stayed steady, large transfers to custodial wallets have been rising. Whales aren't leaving, they're relocating. That's exactly what institutions do when they prepare for long-term holdings. They're not here for hype, they're here for positioning. And here's what they know that most don't. The future of finance isn't about digital coins, it's about tokenized liquidity. That means stocks, bonds, and real-world assets moving across blockchains instantly. Ripple's XRP ledger is one of the few systems that can handle that kind of volume, with built-in compliance and scalability. That's why Wall Street is paying attention now, because tokenization isn't a concept anymore, it's a race. And whoever controls the bridge between those assets controls the future of money movement. Here's the shocking part. While the crypto community argues over prices, Wall Street is focusing on infrastructure ownership. They don't need to pump the token. They just need to own the pipes, the exchanges, the liquidity hubs, the custody firms. That's how they win, by capturing the rails, not the retail narrative. It's exactly what they did to the internet. They laughed at it, regulated it, then quietly bought it, one company at a time. Now they're doing the same thing with blockchain. And XRP, whether people like it or not, sits right in the middle of that transition. But why all the secrecy? Because open accumulation would spike prices instantly. If the public understood how valuable, compliant, institutional-grade liquidity will be, supply would dry up overnight. So the strategy is simple. Delay headlines, sow doubt, accumulate quietly, and unveil later, when the system is already built. That's the Wall Street playbook, and it's happening again, right under everyone's nose. When you understand how institutions operate, you stop expecting announcements. You start looking for footprints, and those footprints are everywhere right now. Custody banks investing in blockchain infrastructure, private liquidity hubs quietly testing RippleNet, major consulting firms producing reports that read more like blueprints for tokenized finance than analysis. That's how Wall Street telegraphs its next move, indirectly. They'll never say we're buying XRP. They'll say we're exploring cross-border efficiency. Same action, different language. Let's look at some of those footprints. In 2024, several Ripple partners expanded corridor usage across Asia and the Middle East, regions where institutional volume dominates. At the same time, tokenization pilots backed by BlackRock, Citi, and JP Morgan began focusing on the exact infrastructure Ripple built years ago. Then you have the BIS, the Bank for International Settlements, openly discussing interoperable settlement layers for cross-border payments. That's Ripple's dictionary. You think that's coincidence? Wall Street never moves randomly. It moves in layers, first research, then pilots, then acquisition. We're in phase 2 right now. The question isn't if XRP will be used, it's how deeply it'll be integrated once the rails are live. Remember, liquidity is universal. Every asset that moves digitally will require conversion points. That's what XRP was built to do, convert value across borders, instantly. When the world finally tokenizes equities, bonds, carbon credits, and currencies, something will need to bridge them all. That bridge is what Wall Street's quietly preparing to own, and the XRP ledger is already built for it. Let's talk psychology for a second. Retail investors think growth looks like hype. Headlines, spikes, FOMO. Institutional investors think growth looks like silence, because the best trades happen when nobody's paying attention. That's why Wall Street's public attitude toward XRP still feels dismissive. It's cover. They know that once retail believes something is dead, accumulation becomes easy. They've been playing this game since the stock market existed. By the time CNBC runs a bullish headline, it's too late. By the time the average person notices volume, the institutions have already filled their positions. That's what's unfolding right now. Look closer at the timing. Ripple gains regulatory clarity. Exchanges relist XRP. Tokenization and ISO 2022 adoption explode globally. CBDC projects begin testing interoperability, and simultaneously, institutional liquidity programs begin expanding in the background. That's not a coincidence, that's synchronization. The plumbing of the new system is being pressure tested quietly before the switch flips. Here's what nobody wants to admit. Wall Street doesn't hate XRP because it's useless. They fear it because it's too useful. It removes friction they've spent decades profiting from. Settlement delays, correspondent fees, hidden spreads, that's how the old system made money. XRP erases all of that in seconds. So what do? They adapt. They'll still make money, but through control of access, liquidity hubs, custody, and compliance infrastructure. That's why the public narrative is XRP is slow, while the private reality is integration. They're already inside the system. Ask yourself why some of the world's largest financial consultancies now host Ripple workshops. Why banks that once ignored crypto now run internal blockchain teams. Why executives who mocked digital assets 5 years ago now speak at fintech conferences about tokenization. The shift isn't coming, it's already happened. And yet, for the retail investor staring at a stagnant chart, it looks like nothing's moving. That's the illusion Wall Street relies on. Keep the public distracted with price while they accumulate infrastructure. Let's visualize what's next. Stage 1, adoption. Ripple connects banks and corridors under the radar. Stage 2, standardization. ISO 2022 goes global. XRP gains regulatory legitimacy. Stage 3, tokenization. Trillions of dollars in assets migrate on-chain, needing bridge liquidity. Stage 4, monetization. Wall Street launches products that run on the rails Ripple built. At that point, the narrative flips overnight. Analysts who ignored XRP will suddenly call it essential. Funds will launch digital liquidity ETFs, and retail will finally pay attention. Too late to be early. Dash. So what is Wall Street really hiding? They're hiding how integrated XRP already is in the coming framework. They're hiding their own preparations, the partnerships, the pilots, the quiet deals, and they're hiding it because revealing it too soon breaks the accumulation phase. They want liquidity without noise. They want control without competition, and they know the only way to get both is to keep the public looking elsewhere. If you strip away the noise, the truth is simple. Ripple has built the rails. Regulators are clearing the path, institutions are testing quietly, and Wall Street, the same group that once dismissed XRP, is now preparing to profit from it. That's not a conspiracy. That's how every financial evolution unfolds. A few years from now, when the financial press starts calling XRP the backbone of digital liquidity, the same voices mocking it today will pretend they saw it coming. They always do, because history repeats in rhythm. First they ignore it, then they fight it, then they buy it. Right now, we're at the quietest stage, the part where belief feels lonely and patience feels expensive. But this is exactly when conviction matters most. Dash. So what is Wall Street hiding about XRP? Not a secret formula, not a backroom deal. They're hiding the obvious, that XRP has already won the technical race. The only thing left is scale. And when scale arrives, the silence will end, replaced by headlines that make it sound like it happened overnight. But you'll know better, because you were watching when nobody else cared. Dash. If this opened your eyes to what's really going on, subscribe to Crypto Equation, Dash the channel that uncovers the moves behind the market, not the noise in front of it. Because in the end, the biggest secret isn't that Wall Street is hiding XRP, it's that they're preparing to depend on it. This is Crypto Equation, and I'll see you in the next one.